What's good, y'all? It's Joel. I'm coming at y'all with another video. So for this video, we're gonna do a recap for the NAS100 for Wednesday, July 19th. So as always, we like to jump into Forex Factory to get a weekly overview. So like I mentioned in some of my previous videos, for this week, this is a full trading week. We'll be behind the charts every single day. Um, just see what happens with price, and to see if any opportunities ever materialize. Everything looks good, so we'll basically be trading Monday through Friday. I'll just post the recaps for Monday and Tuesday. This will be the recap for Wednesday, and then I'll also be doing recaps for the rest of the week. So jumping right in, same strategy. At This is the 8:15 to 8:30 candle. So at 8:30 we look left. Where are the most obvious swing highs and swing lows? Right, the most obvious swing high is at this level right here, and then the most obvious swing low, um, I would actually put it at this level. And the reason for that is because I like using like for this is an obvious swing low, right? Because the cancel left, cancel right are both higher than it. Uh, except when it comes to marking liquidity pools, I like marking the candles that aren't in the brown shaded area. So everything that's like before 8 a.m., which this would be the most obvious low at this level right here. So these are basically the pools I'm working with, right? So now we'll jump into the 1 minute time frame, right? And so the next candle is basically the start of 8:30, which is essentially the stop hunt, where the market begins moving to try to take out traders. So once again with the strategy, we'd like to see the market purge one liquidity pool, and then if one side is taken after 9:30, we want to see if it's the buy side, we want to see at 9:30 the high get cleared again before delivering a break of structure, and then a fair value gap back down. So boom, right here at 8:42, we see that buy side was taken. So we'll mark this with the blue eyeball, letting us know that that side is purged. So now what we do, we basically don't really care much for what price action does because we're waiting for the 9:30 um, stock open, right? Since NAS is correlated, since NAS is an aggregate of stocks, right? The 9:30 stock opening, New York Stock Exchange open is actually a super important time. So this massive candle up here, it cleared the highs that we previously made, right? So this was the high that was previously made. The 9:30 candle pushed up, created the highest high for the session, which is exactly what we want to see. So this high that was created, um, we want to mark the last structure point, which would be, I'll have to skip one more candle, which would actually be this candle right here. Um, Reason why I need to skip one more candle is because remember, for a swing, it's like a three candle pattern, right? Candle to the left, candle right here, and then candle to the right. So it clearly made a swing, and I'll mark this purple so you can clearly see it, right? This push here also, you know, made a new high, which is also what we want to see because remember, buy side liquidity was taken, so we want to see as many orders activate as possible before making a rundown. So this is the swing. So now in a perfect world, in a situation like this, ideally, I would like to see another push up to clear the high of this wick, just because like from this wick down to this break of structure, like I don't like seeing like big wicks like this because usually if I was to take a trade, right, say, there was like an entry with a fair value gap, I would basically have a stop loss all the way up here and a take profit down here, which, the risk reward wouldn't be that great. So I don't really like seeing wicks like this. So ideally, I would like to see this high taken out and then a breaker structure. But I know usually when a price goes up in wicks like that, that's usually not the case. But we'll let it play out. So getting another bearish candle, boom. So now we're starting to see displacement, right? We're starting to see aggressive bearish candles. Now, you, one thing to be aware of. So now we took liquidity and we broke structure. Now it's a matter of finding a fair value gap. So I'm marking the displacement low to displacement high in pink, right? This is the range that we're working with, the last leg in structure before the break of structure. And now at this point, we're looking for a fair value gap that falls within this range. So, the most obvious, well, let me not say that. The only pretty much fair value gap that exists is this tiny rectangle right here, you know, which is super small. So in a case like this, I wouldn't even consider this to be a fair value gap just because like it technically is a gap, yes. But when it comes to trading the strategy, usually you want to see a gap that's obvious. Usually you want to see a gap that's like a big like this gap right here, right? You want to see space like that where it's like it's obvious that the market left that behind and that it wants to return. If it's a tiny gap like that, chances are like that's not like could the market return to it? Sure, but it it's less likely to hold compared to a larger gap. So in this case, I wouldn't even consider that as like a legitimate fair value gap entry, right? And I'm looking at the 2 3 minute time frame. I'm not seeing anything. So if I keep fast forwarding, boom, this next candle right here is the candle that takes out sell side liquidity. So remember, like how I stated in um like the video for yesterday for Tuesday, July 18th, what I stated is if price takes both liquidity pools before we, get into a trade, that the trading day is pretty much over. So in this case, right, shortly after 9:30, we seen a purge higher, and then price literally just melted and cleared out the sell side liquidity. So at this point, you know, at 9:34, I'm basically closing trading view. Like I'm done with trading. I didn't take a trade, but there's no trade to take because both pools were already taken, right? There was price never gave us a fair value gap entry, and price never returned back to, deliver us the entry. Price just activated orders and shot straight down and took off the opposing liquidity pool. So this is another non-trading day where I would, be behind the computers waiting for trade, and then the moment I seen this, like I knew the trading day is over, like there's just nothing to do. So this is the importance of practicing patience as a trader, right? You see like price came down, wicked this liquidity pool, and then immediately just reversed away, So you're when it comes to like being a successful trader in this industry, you need to have, your set of rules in place. You need to know when to engage, when not to engage, and you need to follow it. And the importance of being able to follow it is so that you can set yourself up for success, right? If we would have, you know, say if we would have seen this and say, oh, well, but there's a gap right here. Let's just trade this anyways. Like it doesn't matter if the liquidity was taken. We'll just take a sell right here. You took a sell position, right? You would have been stopped out, and you would have taken an unnecessary loss, right? Like I've seen traders with even though like both of the objectives were taken, right? Both liquidity pools were taken. I've seen traders like still try to jump in and chase a trade when there's nothing. You see, right after both pools were taken, what happens? Price is consolidating. It's just staying in like this same. Sorry, but it's literally just staying in like the same box, right? Like nothing's actually happening. So you just don't want to be in situations like that. And for me, it's like I'd rather wait however long I need to wait. I rather wait to find an optimal um, setup so that when I do take it, I'm confident that like it's going to go in my favor, right? I'm not interested in gambling in any of these scenarios. So once again, this is another super short video, right? No trade setup materialized, but we're just sticking with the plan, following the strategy, and we're seeing every single day that price is attacking both liquidity pools. Like this is happening every single day. So all it is just pretty much waiting for the market to give you the opportunity to enter so that you can enter the trade and hopefully, ride the move down to the opposing liquidity pool. So seeing this happen every single day should give you confidence that like, this is the game that the market is playing, that all it wants to do really is to take out traders on both sides and go about its day. So we want to trade with the market, right? Trade in alignment with the market because the market is the one that controls everything, right? So we want to be on the right side of the market, not on the wrong side. So um, if you found this helpful, do leave a like, subscribe, share this video with anyone that you think would benefit from this, and do leave a comment. If there's any questions, um, any questions you have, any critiques, I'm more than eager to hear what you have to say. So once again, it's Joel, and I'm out. Peace.